To Marcus Carlson. Marcus, earlier we spoke to one guest who was telling us how sanctions could really hurt Russia in the pocketbook.
Yes.
Tell us more.
Yes, indeed. We've been getting the same kind of message from Russia itself this Tuesday. As you've been saying, Francois, there are a lot of moving parts when it comes to this Ukraine crisis, and we're going to take a look at some of them from a business perspective. Russia's finance minister, as I said, has warned that the Russian economy is facing its most difficult situation since the financial crisis in 2008. Anton Silyanov says economic growth may ground to a complete halt this year. In part, he blames a massive outflow of capital as investors worry about potential Western sanctions. Now, also on Tuesday, Russian stock markets took a hit on reports of fighting in eastern Ukraine. At the end of the session, the MySex index in Moscow had fallen 2.5%. Now, at the same time, Germany's economy minister has said Russia will face more sanctions unless there is a de-escalation in Ukraine. The United States and the European Union have so far slapped travel bans and asset freezes on Russian and Crimean officials. Speaking in Berlin, Sigmar Gabriel said that Western powers would be willing to take additional steps, seeing what's happening in Ukraine.
If Russia is not ready to make sure the escalation finally ends, it must expect that Europe and Germany will be ready to start the third phase of sanctions.
That was Sigmar Gabriel speaking there in Germany. Meanwhile, Ukraine has seen its currency spike against the US dollar and other currencies. The move comes after Ukraine's central bank hiked its benchmark interest rate. The bank hiked that rate from 6.5% to 9.5%, quoting a tense market situation. The hryvnia has lost around 35% against the dollar since the start of the year, which makes it one of the worst performing currencies so far this year. German utility RWE says it started sending natural gas to Ukraine. The move is meant to support Ukrainian energy supplies, even if Russia cuts its deliveries of natural gas to the country. Russian state-owned company Gazprom says Ukraine owes it $2.2 billion, and the Russian government has said Ukraine may have to start paying for gas up front or risk being cut off. Now, we've already talked about the stock markets in Moscow. Let's bring you a wider snapshot of global stocks this Tuesday. In Europe, the FTSE in London sank to a three-week low and closed to 0.6% down. Mining shares, they were down in London on concerns of low demand from China. The Ukraine crisis was also seen to be weighing on shares elsewhere in Europe, with the CAC 40 in Paris losing 0.9%. The Frankfurt DAX even harder hit, down 1.8% at the close. We were talking about the MySex in Moscow earlier. It was down 2.6% at the close, as you can see right there. In the United States, shares, they're also in negative territory this hour. The American indices have taken a hit after disappointing manufacturing figures for the New York region in March. As you can see here, the NASDAQ in particular, the tech-heavy index, taking a real hit, down 1.5% this hour, whereas the Dow Jones Industrial Average is down 0.5%. We're going to switch gears now. British company Imperial Tobacco has announced it's closing 2 cigarette factories, one in France and one in England. The closures will lead to around 900 jobs being cut. The maker of the cigarette brand Gauloises blames a tough economic climate and increasing regulation, as well as the illicit tobacco trade. Carl Brown has more.
French factory workers near Nantes get to grips with the news of their eventual dismissal. CETA, a subsidiary of Imperial Tobacco, confirmed on Tuesday that France's largest remaining cigarette factory is to shut down. It's one of 2 such factories, the other in Nottingham, England, that will close gradually over the next 2 years, leading to the loss of almost 900 jobs.
I've got tears in my eyes. I've been making Gauloises cigarettes for 37 years. I don't see why we're closing. They took over the company CETA to get the name Gauloises, and now they throw us out like old socks.
The company says the 2 factories have been operating at less than half of their capacity. The number of smokers in France and much of Western Europe has been falling, due in part to a sustained anti-smoking campaign and rising cigarette prices. In 2005, more than 54 billion cigarettes were sold in France. In 2012, 51.5 billion were sold. And in 2013, a more sudden fall brought the number to 47.5 billion. In a statement, Imperial Tobacco said industry pressures have forced it to restructure.
The proposed closures reflect declining industry volumes in Europe, impacted by tough economic conditions, increasing regulation and excise, and growth in illicit trade.
Brandishing a banner saying layoffs are adding to Imperial Tobacco profits, workers decried the cuts and the announcement that more workers will be hired in Poland. Now the iconic French brand, the Gauloise, will be almost exclusively produced outside of France.
Okay, let's talk you through a few other corporate stories that we've been following for you. Coca-Cola beat expectations when it reported its first quarter results this Tuesday. The world's biggest beverage maker made just over $1.6 billion between January and March. That's 8% less than last year, but sales were higher than expected. Coca-Cola's chief executive says the company's momentum is improving as, for instance, the economic picture in Europe is brightening. The Swiss food company Nestlé missed expectations at the same time. Its sales fell in the first quarter by 5% to 20.8 billion Swiss francs, or around 17 billion euros. The Kit Kat maker was hit by the strength of the Swiss currency. It also blames weakness in two key regions: weak consumer confidence in Europe and the harsh winter in the United States. And the European Parliament has given the green light to the last missing piece to complete a European banking union. Lawmakers approved of a blueprint on how to unwind failing Eurozone banks. It's meant to prevent governments from having to bail out financial institutions with taxpayer money in the future. The reforms are part of the Eurozone's efforts to create a banking union, which, in turn, is meant to help to prevent another Eurozone debt crisis. That is the business news for now. I'm going to hand it back to you, Francois, for the rest of it.
All right, many thanks for that, Marcus Carlson. Time now for sports. Let's say hello to